This is Business Incorporated on Channels Television, and we're glad to have you. I am Bisi Adebayo. On the show today, Dangote Cement PLC to consider a London share sale over the next 2 years. And Nigeria's largest financial services group, FBN Holdings, records $1 trillion transactions on its dollar banking channel in 2017. Plus, South African Airways seeks 5 billion rand to stay afloat. Well, we're kicking off the show today with two of Nigeria's largest companies on the local stock exchange. First is Dangote Cement PLC, which will consider a London share sale over the next 2 years as Africa's biggest producer of the building materials seeks funds for expansion. The cement giant, owned by the continent's richest man, Aliko Dangote, will also seek to raise $500 million via the issue of a Eurobond. On Monday, Dangote Cement hired former Extractor PLC Chief Executive Officer Mick Davis as a non-executive director alongside Cherie Blair, a lawyer and wife of ex-UK Prime Minister Tony Blair. The high-profile appointments were widely seen as a prelude to a listing in London after the cement maker previously mulled a share sale in the UK capital in 2010. The company has approached investment banks about arranging the IPO. The share sale could raise about $1 billion. And Nigeria's largest financial services group, FBN Holdings, says $1 trillion transactions were processed on its dollar banking channel in 2017, while more than 2 million subscribers use its first mobile platform, achieving the fastest growing mobile banking penetration across Africa. Now, this was part of the robust full-year 2017 earnings report released by FBN Holdings late Tuesday, showing a 206.4% growth in basic earnings per share to 121 kobo and a stronger net profit return on average equity of 7.6%. The listed company posted a headline earnings of 595 billion naira last year, pre-tax profit higher by 147.6%, and after-tax profit stronger by 178.8% to 47.8 billion naira. FBN Holdings says customer deposits grew 1.3%, while non-performing loan ratio declined to 22.8% last year from 24.4% in the 2016 period. And so let's hit the markets now, starting from home in Nigeria, where the all-share index is looking good at intraday with a 0.22% gain. In South Africa, the broad index was almost 1% negative at midday, while Egypt's EGX30 index was rallying around 0.23%. In East Africa, the Nairobi Stock Exchange finished Tuesday's session 0.38% lower. And in the Middle East, the numbers are mixed at intraday, with the Abu Dhabi Stock Index 0.39% lower, while the Dubai Index slipped 0.26% also at midday. The Qatar Exchange was up 0.2%. In Saudi Arabia, the stock index was 0.83% lower at intraday. And in Europe, the markets were lower today as rising yields and the bond markets offset excitement surrounding corporate earnings. Well, let's talk to Conrad Boulson, who's standing by at the Frankfurt Stock Exchange for details. Hello, Conrad. It's good to see you today. Now, let's begin this conversation with the U.S. bond market, where the yield on the 10-year Treasury has climbed above 3%. What are the implications of this, and what's the reaction on the European markets?
Well, the European equity markets, the markets for company shares, have slumped, which means they are following today what happened on Wall Street yesterday, where the Dow Jones Industrial Average also lost significantly. Higher yields on American government bonds. This means higher returns for fixed income investments, and that's, of course, a competition for company shares. But, of course, the implications of this increase in government bond yields in the U.S. are more. They have to do with speculation on the market about inflation, which, of course, are related to the increase in the oil price, which has risen to around about $75 US for the barrel of Brent North Sea oil. more inflation will make higher interest rates more likely. This means higher borrowing costs for companies. And this at a time where people on the equity markets are not really sure whether they can expect a continuous increase in earnings. We got a number of earnings reports today which show that companies have become a bit more cautious. Caterpillar, for example, the large maker of building machines, was talking about peak margins, which means that the company is not so sure whether it will be able to increase its profit margins in future. And this, this reasoning, higher competitiveness of fixed income investments, of government bond yields, and the high valuations on the stock market, and uncertainty about the future of companies, this caused a sell-off on the stock market today.
Conrad, a huge takeover deal in the pharmaceutical sector is in the making. Takeda from Japan has managed to convince the board of the British pharma company Shire to agree to a $65 billion takeover. Tell us more about this deal.
Yeah, it's a huge deal, $65 billion, and this from Takeda, which is the smaller of the two companies. Interesting. But Takeda from Japan is also the company who needs the deal more. It needs to grow. And if it cannot grow in its home market, the domestic market, Japan is considered to be a very mature market in terms of medications, then it needs to grow by takeovers. Takeda is very focused on its Japanese market. It also does not have so many new developments in its pipeline. And as you know, the pipeline, the production pipeline, the new developments of medications, that's the lifeline, the most important thing for a pharmaceutical company. Shire has a lot of new products in its pipeline and in many different fields: gastrointestinal disorders, neuroscience, also rare diseases. This is where Shire is very, very big. It has also a blockbuster hemophilia franchise, and this is what makes Shire so valuable for Takeda. Will the deal happen? It's not a given yet. The share price of Takeda lost around about 7% today because investors are fretting over the capacity of this Japanese company to come up with the money it needs for this deal. And the stock slide of Takeda, if you compare it to the moment when the rumors about this deal first came out, is 18%. And this is supposed to be a cash and share deal. So the value of the shares of Takeda really counts. And this is what makes a couple of people on the trading floors hesitant to believe that whether or not this deal is really going to happen.
See how that all plays out. Tonight, Facebook will report its quarterly earnings, and that, of course, is the first time since the Cambridge Analytica scandal. But the German Federal Cartel Office is sending warning signals to Facebook, saying that the amount and format of the data collection violate vital data protection rules and are abusive. What's going on? And tell us what the earnings report is expected to look like.
Well, people I talk to here do not believe that the earnings of the first quarter were really influenced very negatively by the Cambridge Analytica scandal and the upcoming discussion about the business models of companies like Facebook. The look in the past will likely not be so influenced. Advertisement in the internet, the business there has grown so much. Also with other companies, we've seen it with Alphabet this week, the Google parent company. Today, Twitter reported very strong earnings because of strong growth. So this is likely going to show in the earnings report of Facebook as well. What's going to be very interesting is the outlook. And here, questions what the regulators will do with Facebook are playing in, of course. The German Cartel Office chief in an interview today said that he believes it's illegal that Facebook collects data of internet users, even if they're not on Facebook. Even For example, when you're on whatever page, Channels TV, the homepage there, which has Facebook share buttons on it. And even if you are on a page like this, Facebook is said to be able to track you, and that, the German cartel authority says, is illegal. How is this pressure of regulators playing into the outlook of Facebook? That will be the big question today when the numbers come out.
Well, many thanks, Conrad, for those updates, and we'll see you again tomorrow.